Hello everyone, this is Iris from RONSCO Weekly. If you'd like to stay up to date with the latest Chinese steel prices and market trends, please subscribe the like buttons and subscribe right here to stay up with future updates. The Chinese steel market has been experiencing a prolonged period of decreasing prices, with futures at the lowest point in 6 months. What are the reasons that drive this wave of decrease? Let's check out. First of all, the political situation between two major US parties regarding government debt caused market players to be more cautious, which benefit the US dollar, raising the value and creating more pressure for steel prices. Except for that, speculation from the Federal Reserve that there could be an increase in interest rate in June led to a jump in the dollar index to a 2-month high. At the same time, the weak property market and worries over local government debt negatively impacted the outlook for China's economy, and that a negative effect on steel prices. Steel production in China increased by 85,000 tons last week, but apparent demand decreased by 160,000 tons. The overall inventory dropped by 520,000 tons, showing a slight recovery in supply even though demand keeps decreasing. Looking ahead, it is expected that the market will remain weak in the coming week, mainly because of 3 factors. Firstly, the bearish demand could decrease further as the off-season approaches. Secondly, without a significant decrease in supply, it will be difficult for steel prices to recover. Lastly, the Chinese government has limited options to improve the economy, as lowering interest rates could lead to a faster depreciation of the RMB. While our Chinese steel prices continuing to decrease, we will keep an eye on the market and provide you with the latest Chinese steel prices and market trends. See you next week. Bye bye.